Weakness continues on Wall Street. The S&P 500 slips for the third straight session, while the Nasdaq slips into negative territory for the year. Asian markets open lower on a weak handover from Wall Street and uncertainty over US President Donald Trump's tariff war. The gift nifty is also suggesting a mildly lower start for our own markets. The gold rush continues with prices hitting yet another record high on Monday as safe haven buying continues on concerns over Donald Trump's tariff plans and a weaker US dollar. Crude prices tick higher with Brent trading above $74 a barrel. The government has begun inviting bids to appoint lead managers, brokers and merchant banks for its disinvestment agenda. The bids are being invited for stake sales in select public sector companies and financial institutions. After an 8-month gap, India and the UK have restarted negotiations to seal a free trade agreement. Government sources say Scotch whisky could get tax concessions similar to bourbon whisky. And wanted to be the captain of the ship, says Federal Bank Chief KVS Manian, as the bank draws up a plan to break into the top 5 private lenders. Speaking exclusively to CNBC TV 18 in his first interview after taking over, he also predicts headwinds for banks and agrees with Uday Kotak's assessment on the end of the Goldilocks period for the sector. He adds that the bank is also gearing up to provide wealth management services. Good morning, you're watching Power Breakfast here on CNBC TV 18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are faring. Well, it's a red screen across Asia. Then Hang Seng was an outlier all through the last couple of weeks, but today Hang Seng is the big underperformer as well, and that comes on the back of the recent comments made by US President Donald Trump with regards to tariff impositions and, of course, on the investments made by China in strategic sectors in the US. Now, Hang Seng is down over 2%. The Taiwanese index is also down 1.25%. The Nikkei, resuming after yesterday's holiday, is down 1%. The Kospi, trading slightly below the flat line, but is an outperformer by not falling as much compared to the other peers. And of course, the Shanghai Composite 2 trading with losses of around 0.5%. For now, it's a red screen in Asia. They pull up the gift nifty as well. Not as bad as the Asian screen is reflecting, but that, of course, we're coming on the back of a very sharp sell-off in yesterday's trading session. For now, the implied open is suggesting an 18-point downtick for our own markets. But Wall Street, well, we were hoping, looking at the futures yesterday, that it would be a positive session, but it was not to be. But most of the indices ending largely lower because key tech companies dragged the S&P 500 and the Nasdaq. The Dow Jones ended just above the flat line. The S&P 500 lost 0.5%, but the Nasdaq was the big underperformer, falling over 1%. Now, Monday's decline among tech names also pulled the Nasdaq into negative territory on a year-to-date basis. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets ending the day mixed on Monday as Wall Street failed to bounce back after Friday's sell-off. The Dow up 33 points, but the S&P was lower by 30, while the tech-heavy Nasdaq fell 237 points. Apple announcing it plans to spend $500 billion in the U.S. over the next 4 years. As part of the investment, Apple will open an AI server factory in Houston, Texas, that's slated to start in 2026. In addition to the factory, Apple said it plans to hire about 20,000 new workers across the U.S. who will mainly be working on research and development, silicon engineering, and machine learning. The announcement comes on the heels of CEO Tim Cook's meeting with President Trump last week in an effort to spare the tech giant from tariffs the president has been threatening in his first weeks in office. During Trump's first administration, Apple made multiple announcements about investing in the U.S., which helped it secure exemptions from some tariffs. Meantime, Starbucks will be laying off about 1,100 of its corporate employees and will not fill several hundred of its open positions. In a message to the company, the CEO, Brian Nichols, said the cuts are part of the chain's effort to streamline its operations and that workers at its cafes are not affected. The layoffs come as Starbucks tries to entice customers back to its cafes after its sales fell for 4 consecutive quarters. That's what's happening here in the U.S. Back over to you in Mumbai.
Now, JP Morgan CEO Jamie Dimon says that if tariffs are implemented by Donald Trump and if they are overused, it could be bad for the US economy. He also called the US government inefficient and said that Elon Musk's Doge effort needs to be done. Listen.
I think the economy is like this huge ship of state, and these things are at the margin may not change that ship of state. And also, it really depends the quality of what they're done. More effective government, more efficient government isn't bad. It's actually a good thing. If they get overdone, tariffs properly used. If they're overused, if there's retaliation, yeah, they could be bad for the economy. But they're just making up for use for negotiation, just making up for unfair trade. So I'm more in the wait and see attitude about how this all plays out. The government and everybody would know the government's inefficient, not very competent, and it needs a lot of work. And so you and I, it's not just waste and fraud, it's outcomes. Why are we spending the money on these things? Are we getting what we deserve? What should we change? So I think doing that needs to be done. Remember, it was tried by Al Gore and Bill Clinton. It was tried by a bunch of other folks in the past. Yes, they should try. You have to understand that whenever you go to any big institution or the government, the bureaucracy pushes back on everything. And they will hear every little thing they're going to push back on. So you have to be strong if you're going to do it. I'm hoping it's quite successful. If there's overreach, things they're doing which are not legal, the court should stop it. But I'm hoping that's not the case. But again, it's very early stages to tell exactly what it's going to mean and how it's going to affect the economy.
That's all the global market action, but how will all of these overnight cues impact our own markets? Our research team is joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Vivek joins in to get all the market cues we need to watch out for. Vivek, good morning. No respite on Wall Street overnight, but what's the setup looking like back here?
Well, good morning, Hormaz. Like you mentioned, absolutely no respite from the selling pressure. It's clearly a risk of sentiment that we are seeing across global equity markets. And that sentiment continued even in Monday's trading session, even on Wall Street. What was under pressure? The Nasdaq and S&P 500 individual stocks took a significant beating, but the Nasdaq was the one that bore the brunt of the selling pressure, down over 1%. Also remember, Nasdaq actually turned negative for 2025. Now, along with that, oil prices on the back of sanctions as far as Iran was concerned actually saw a move leg up high yesterday. Brent ended near the $74.8 a barrel mark. Now, coming to Indian markets, selling pressure intensified yesterday. FI selling yesterday was at a significantly higher number. Selling actually continued for the fifth straight session. What was the top sectoral laggard? Very surprisingly, yesterday, the Nifty IT, not only did the large caps, but even some of the mid-cap IT names yesterday saw significant selling pressure. And that actually has capped off what has been essentially a very weak market for typical defensives like FMCG, pharma, as well as IT. IT index, however, yesterday ended with some minor gains, and this was after 15 straight sessions of cuts, and the market breadth, even in the broad end of markets, was firmly in the grip of the bears or firmly in the grip of declines. Asian markets are quite weak. GIFT Nifty, however, is indicating a subdued, flattish start to our own markets today.
Indeed, Vivek, thanks a lot for that update. A 30-point downtick on the GIFT Nifty. The implied open is what is suggesting so far. But there are plenty of stocks that you need to keep on your radar this morning, and AkzoNobel is one of them. It's been in the news for the sale of its decorative paints business, the potential sale. But for now, the board has approved the sale of its powder coatings business to the parent entity. That will be done for around 2,073 crore. The R&D center will be sold for 70 crore rupees. They're going to seek shareholder approval for the same. And the powder coatings business accounted for almost around about 11% of the annual revenue in FY24. Now, Camlin Fine is another M&A news that has come in this morning, and they are going to acquire 100% stake in a company called WinPy. And firstly, they're going to invest around $3.3 million in the company through a subscription of the listed secured convertible bonds. And of course, they'll be executing a mandatory tender offer, what they call an open offer. That'll be done for around about 3.6 euros a share. Biocon also should be on your radar. That's because they have launched the Yesintec biosimilar in the US, which is used in the treatment of Crohn's disease, the ulcerative colitis, plaque psoriasis, and psoriatic arthritis. So multiple diseases. So that's a positive development for Biocon. Now, PSU banks and financial institutions should be on your radar because the government, as we mentioned in the headline as well, they have invited bids to appoint merchant bankers, lead managers for the stake sale. And this will be, once they are appointed, they will be done for a period of 3 years for PSU Bank offer for sales, and the stake sale plan is currently in the preliminary stage. Now, the stocks that should be on the radar should be the high float PSU banks, right? The low float PSU banks, I beg your pardon. The Indian Overseas Bank, Central Bank of India, Punjab and Sindh Bank, New India Assurance, and even LIC should be on your radar. IREDA shareholders have approved raising 5,000 crores via QIP, and UPL step-down subsidiaries have made some additional investments in their joint venture companies in Brazil. So keep these names on your radar. And lastly, Nigel joins in to wrap up this segment with cues from the F&O space. Nigel, good morning. Well, 22,500 now the key for the Nifty.
Well, that's right, Hormuz. Not too many positives in yesterday's trading session, but I just want to highlight a couple of factors. The Nifty Bank, that appears to be fighting for the bull. So if you pull up the intraday chart, you'll see the way that index recovered close to around 3 to 400 points from the low point of the day. The other point is the Nifty ended lower, but the VIX as well is cooling off. So that's a positive, actually, because normally when the markets are down close to around 250 points or thereabouts, the volatility index should spike up, which didn't happen in yesterday's trading session. So that's one positive that you're looking at. Next up, the FIs. They continued their shorting ways. In yesterday's trading session, they added close to around 11,000 short contracts, which takes the short position to around 85% or thereabouts. So they have been aggressively net short. And if you just pull up a chart, we're talking about them being aggressively net short at around 175,000 net short contracts. Take a look at that. In a matter of a week, that's gone up by nearly around 10%, from around 180,000 odd all the way to around 2 lakh contracts, or in an absolute value-wise, well, that's the highest that we have seen. So FI is aggressively net short. Normally, you will say that you expect some kind of a short covering bounce to play out with these kind of short positions. The problem is the kind of cash market selling that you're looking at. But if you look at the aggressive net short positions and you look at the PCR, which has come down to the lower end of the range, normally at around 0.65 or thereabouts, you do see a bit of a short covering bounce that plays out. So today, at some point of the day, I think the PCR will dip down to around the 0.65, 0.67 odd. And that would indicate that do not rule out a bit of a bounce that we'll see from the lows of the day. There appears as a strategy at place at around 22,600, which is the call as well as the put. It's known as a short straddle. You ride both those two strikes, you pocket a premium of close to around 200 rupees, and you brace for a range of 200 plus 22,600 and 200 minus from 22,600. So that's the broad range that you're looking at. And finally, the Nifty Bank, since I just spoke about that, you'll want it to make a higher high. Last few trading sessions, it's been making a lower high. So that's going to be important. And the levels you're looking at, the crucial support zone should come up for you on the screen. Back to you.
Hoping for a higher high on the Nifty Bank, and that, of course, would brace on the Nifty as well. Nigel, thanks a lot for that. Take a short break. Up next, wanted to be the captain of the ship, according to Federal Bank's chief KVS Manian, as the bank draws up a plan to break into the top 5 private lenders. Excerpts from that exclusive interview after the short break. Welcome back. On to the big exclusive for the day. Federal Bank MD and CEO KVS Manian, in his first interview after taking office, said that I wanted to be the captain of my ship. Now, speaking exclusively to Shireen Bhan, he says that the bank is well poised and is drawing up a plan to break through into the top 5 private lenders of the country with a focus on return on metrics. Here is an excerpt of that conversation.
I think wanting to run your own ship, captain of your own ship,
of your own ship made the choice easier.
That was the easier. That is what made it easy, I think, and the opportunity itself of Federal Bank. Very, very well poised, great journey. Pulled out of the pack of old private sector banks, clearly leagues ahead. Just the breakthrough into the top league is possible. That story excited me, and I am a kind of person who needs to come to work every day with a spring in my step, wanting to do new stuff, and I thought this was a very, very exciting opportunity. Exact numbers are not important, right? The direction is important, one. Two, if there is a sectoral deflation or inflation of those matrices, obviously the point we were making is there is best three and next three, and we should lie somewhere in the middle of that pack. Second, like I mentioned earlier, that yes, there is an aspiration built into it, some stretch built into it, yes. But I think the vision needs some stretch, and I am sure the team I have owns it. All the stakeholders that I have discussed the plan with are keen that we put some amount of stretch in the plan and go for it. If you take our CASA ratio, the broad breakup is 24-6, right? 24% SA and 6% CA. I would say
you're making it sound almost musical now.
The 24% SA is not is fairly in the right zone vis-a-vis the peers, right? More or less, give and take here and there. The 6 of CA is where our difference is, and that's the opportunity. Even within our given network, our SA can be higher without any further investment. Just doing better focused work, we can get outcomes on that. So there are areas like that where we will prioritize to get, juice the network more, to get some higher profitability products like CA. Customer acquisition is probably the higher cost element in most of those businesses than the technology itself. And that is where this is important, right? Technology we can do, but the fact is we have an existing base. Take an example, we have a non-resident base. It's a moat that the bank has built over several years. We do business with them, but our business is highly focused on the deposit side of the business, right? It has relatively less focus on the wealth side of the business. These are customers who are very loyal to us. Sometimes second, third generation of those customers are banking with us. If we make an offer to them on the wealth side, I'm sure we have the trust, their trust that they will buy those products from us. So I think having a base and therefore not incurring costs for acquiring new customers is a very big advantage.
And you can catch excerpts of this exclusive conversation with Federal Bank's MD and CEO all day today, only on CNBC TV 18. We take a short break now. Up next, we get you all the cues from the commodity space. Stay tuned, back on the other side. Welcome back, and Manisha Gupta now joins us with all the updates from the commodity space. Manisha, good morning. What's on your radar today?
Well, I'm looking at the gold prices almost because we are less than $10 away from an all-time high, and the support comes in as the global tariffs continue to lead to safe haven buying in gold. There also are concerns on inflation, trade tensions continue. And if you look at the investment demand, well, the global ETF or the Indian ETF demand has continued much on the stronger side. We've seen record numbers for the month of January in India, and global markets also have continued to see very strong net inflows there. What the market will watch out for now is the US PCE report that comes in on Friday, and that would clearly be in focus. In the meanwhile, the crude prices also have snapped their losing streak. Remember, prices fell by 2.7% on Friday, but we're looking at a rebound right now in the Asian markets. The European Union will hold emergency meeting on March 6th to discuss the support for Ukraine. And in the meanwhile, you've had US start direct talks with Russia, excluding European Union and Ukraine. So there's plenty happening there and some premium coming back in case of crude.
Indeed, some premium coming back in for crude oil prices. Manisha, thanks a lot for that. With that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for today's trade.